All right, Absa is the latest bank to report a huge jump in earnings for the interim period. The bank is now resuming dividend payments. Group headline earnings growing five-fold to 8.6 billion rand. The bank says it's now in a better position than before the pandemic. It attributes the growth to customer support and preserving capital and liquidity, but it warns there are still risks in the short term. The group also expects the country's economy to grow by 4% after last year's 7% decline. Well, Punki Modise is the Absa Group Interim Financial Director, joining us now to unpack some of those results. Punki, thanks very much indeed for talking to us. So indeed a great start to the year, and I would imagine if this improvement, although it's off a low base, you must be happy.
Absolutely, Devin. So if I look at the substantial improvement that you see, the big driver thereof is strong delinquency performance that we continue to see, as well as the quantitative easing measures that were put in place both by banks as well as by governments.
I noticed that Absa expected more bad debts at the start of the year, but it seems that consumers got back on their feet faster than expected, and that played a big role in the results today, didn't it?
It did, Devin, and I think also the other contributing factor is just the strong liquidity that was availed to customers through payment relief mechanisms that we provided to customers. We see that continuing to support our deposit base, and if you look at our growth from a deposits point of view, we saw a 10% increase, and interestingly, that has led to our book to grow to over a trillion on a year-on-year basis. Thanks.
What does it look like in terms of how businesses and clients are actually taking up debt? Is there an uptake in that regard?
It's actually a mixed story. So I think from a sentiment point of view, we still see business confidence being fairly, low, and the growth there is fairly defensive, relative to what we're seeing from a retail customer point of view. And I think to a large degree, also retail customers, bulk proportion of the growth is coming from the secured portfolios, which is largely to a degree influenced by the work from home mechanisms. So customers really want to start owning their homes.
You know, as always, you always ask a bank what they think about the economy going forward, because you're directly linked to the consumer at hand as the clients. Lockdowns come and go. You know, that's the risk for economic momentum. There's still so much uncertainty out there on where the virus is going. You think we'll still get that 4% growth you envisage for this economy? What's your take?
Yeah, that's our take, Devin, and it's largely informed by the progress that we continue to see around vaccination, as well as the take-up rate from a vaccination point of view. So our sense is that, the more customers or people you have being vaccinated, you'll start to see, the economy closing less and less. And so as we go forward, economic activity should really strongly rebound.
Look, before I let you go, for the sake of the shareholders here, indeed, you started paying out those dividends, but you've got some catch-up to make in terms of the size of that dividend. Am I right? It's still some time before we see the type of levels we saw a few years ago.
Absolutely. And I think how we think about it is the environment is still fairly uncertain. And given the uncertainty, we're moving, but we're moving with a bit of caution. And I think the second thing is that when we look at dividends, we look at things like dividends through the cycle. And at this point in time, we're still fairly comfortable that, our approach to dividends still makes sense in the context of uncertainty that still prevails.
All right, we'll leave it there. Punki Modise, Absa Group Interim Financial Director. Thanks very much indeed for talking to us.